All right. What up, everybody? Good morning. My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse. So I'm glad you're here. If you're new to the channel, thank you so much. Hit that subscribe for me. Hit the like, select all so you stay up to date on the daily videos. We also just started a Twitter and an Instagram. Both are Wheelhouse Trading. You can go search those, or I'll put links in the description, and you can subscribe there. We'll be making posts daily. And guys, don't forget, we have Wheelhouse Wednesday live group trainings inside of the Discord for free. Everybody can join, everybody can hang out. Come in the Discord, the link is in the description. It's fun in there. You don't have to pay for anything. If you don't want, you can just hang out. People share charts, we learn, we grow, we trade. But if you want to subscribe, right now I have the best deal I've ever given for the entire Jedi Gold annual package. You get the trade alerts, you get the one-on-one coaching, okay? You get the courses, you get the Wheelhouse Wednesdays and previous recordings, plus you're going to get all my chart settings and the algorithm and all the updates as it goes, which is only going to be for subscribers. And the code I'm going to put on the screen, it's Black Friday 50, all caps. When you go in the Discord, hit subscriptions, go to upgrade chat, and then choose Jedi Annual Gold and put in that coupon, and you are good to go. Let's get it started, guys. So I have the Dow pulled up on the screen, and it's been a long road because we've been working with you the whole way through the bull run and through the bear run, and we've been through all of it together. And here was our low when I said buy right on that day, right on that pivot, and we did. And this came down, and I said hold the line. These double bottoms, that's how institutions will be thinking. They're going to want to do it. They just dropped it a little lower into the base of COVID versus the peak of COVID, okay? And it has been on a rally ever since. And now with the FOMC minutes being released, a large percentage of the Fed governors and presidents have indicated that they think that it's time to still continue to raise the rates, but slow the aggressiveness of the rate hikes. So this is good. We had a lower inflation report, so we had a little bit of a tick down last time. That got the markets to spur up over this descending pattern right here, which is the primary downtrend. That's huge, guys. When you break out of the primary downtrend, you're on your way to a bull run. This looks like a bottom, right? And you got 1, 2, 3, 4 minor trend reversals outside of the primary downtrend and descending, and now you're at a major trend reversal, which was the peak over here. So this is important. We are moving forward, and if we get one more CPI read that shows these aggressive rate hikes have been working on headline and core, supply and demand, you better believe that market's ready to rally. So that's why I started my hodl down here on this line, and then bought more into it, and then bought more into it, and now I'm just sitting tight. And so the plan's working. I got out way over here when I told you guys to get out, then I triple leverage shorted, ran you guys up on the pivots, down on the pivots the whole way through, and called what was going to happen, and then it happened, told you to stay, and it did continue to go up, and here we go. We walked you through it. It's looking good on the Dow. Let's take a look at the NASDAQ. Okay, so the NASDAQ's a little crazy, right? Still in this primary downtrend, which we can make blue so it makes sense with the other chart, okay? So you're still in this bear market, this primary downtrend, and it also had that big pivot, but when it came down and bounced up, it did come down further, but it didn't make the same double bottom. It did make higher highs and higher lows, but then it kind of just went sideways and fell off, and then made a shorter right leg lower, like a Wyckoff spring, and then it spring. But see this diamond right here at the top? That's an institutional whale style seller. Basically, they lost their diamond hands on that day. It came down. It's kind of been bouncing sideways, and yeah, if the NASDAQ is happy, you know you're in a bull run. If the NASDAQ is consistently going up, there's a lot of stuff going on, and there's leaks and contagion from the crypto market into some of the venture capitalists and Wall Street firms, and of course the hedge funds in the middle. And so yeah, tech being tech and high multiple, it's going to be kinky and funky, and it's going to have, I haven't seen a twisted pattern like this. Like, I mean, I've seen it, but not often, right? I mean, we call that kind of like a coiling, or maybe like choppy or sideways. I think it's a little bit of all of them. But the thing is you're bouncing off a support, and you are still below the 200 on the daily and in the primary downtrend, but the NASDAQ looks good. And you got to know, if inflation goes down, tech goes up. Okay, so anytime that there's an inflation read where inflation goes down, as soon as you hear that in the morning, early in the morning before the market opens, just know that big tech and tech are going to have a big day. That's just how it works. Let's look at the SPY. I mean, look, the SPY, kind of same thing, right? It like came down, found a low, kind of did its little pivot up, pivot down, a little double top pattern, made a higher low, went on the big rally to the descending, came down to this level, rallied up, came way down, broke all these supports. I remember that was scary. But look at institutional buyers came in. They're smart. They literally bought that dip. Came up, okay? Sellers. This was when Jerome Powell had come out, and it came down and made a right leg lower and kind of did a spring. And then, but this is a lower low and a lower high. And then it kind of resolved itself, and it springed up through all these supports. Bounced off this 1, 2, 3, got rejected, came back a level, up a level, back a level, and then just shot up, rejected on the 200, and it's fighting. It's back on the 200. You can see the cloud is blue. The Jedi green light says stay in. We're on approach to breaking the primary downtrend. There is no institutional sales diamonds there. Looks ready to roll. Indicators are strong as well. Let's take a look at the Russell. I mean, essentially you're looking at the same thing on the Russell. The only difference on the Russell is it's small caps, and it had a different pattern coming in. So this was COVID, and then you had all these high growth, cheap stocks, and it went on a massive crazy bull run in 2020, and then it became range bound, whereas the other ones made it out. That was from the February to the May drop on all the indexes, but the Russell never made it out. It was one of the reasons that I knew that the crash was coming, because the crashes always start with the small caps. And like most people thought, the crash started in November. It actually started in February of 2021. But as this was becoming more range bound and we were going through some chop in the summer and the fall of 2021, that's when I kind of realized, this is historically and statistically how they begin. So I was a little bit more on like yellow alert, if you will. So it did try to break out and failed, and that was the beginning of the bear market on the Russell. And you know, those things get sold off quick. You know, there's usually a flight to safety to like your Apples, your Microsofts. There's a consolidation. You know, people wanted to move to cash. Normally they would, but we had a high inflation. A lot of things broke out. This has been, you know, pretty long now, a year and a half or so, but it did find its low like the others, and then it dropped savagely down, pivoted up, and it kind of had its little coiling pattern as well. But if you notice, you're now making higher lows, higher highs. You're kind of in a channel. Like if I were to draw that for you, you're kind of, you know, making some form of a channel here. You know, it's kind of like, you know, it's a little erratic, a little below, a little below, little below, little below, but that's how it works in markets, whether it's crypto or stocks. Imagine this 200 is the mean, the average to the mean, okay? It's always going to make its way back there, but it's like a pendulum, okay? It overreacts to the upside, and then it comes way down and overreacts to the downside, but it always reverts to the mean. So right now, you know, your SPY and your NASDAQ and your Russell are all, like I said in the previous video, going to follow the Dow. Why? Because the Dow is a barometer for the economy, okay? And it is a leading indicator. So all these guys are just getting ready to cross over the 200 and hopefully break out of their descending primary downtrend, which means we are going to be able to start talking about confirmed uptrends. Now it's time to buy. We will be in an accumulation phase. It's called phase 1, coming out of phase 4. That is if it holds and doesn't fall back in. But like I had said last time I did a stock video, and I knew stocks would be okay, and I even put it in the last video. I said I think stocks are going to be fine. You know, we'll cover the crypto stuff, which is not fine. You know, there's still things going on there, and it does look good. And so once you get to the accumulation phase, phase one, and you get over this 200 and out of this on all these indexes, well, not only does green tides lift all boats, right, but smart money is trained to start buying there, which is the accumulation phase. Now, if you're watching this channel, you're probably retail, and you're one of the few that are left. I think there's only 14% of us left out there. Okay, so you have diamond hands, you are tried and true and weathered, and you have thick skin, and you've been through it with us, right? So this is the moment where, you know, things can really start to get better, and it's all going to come down to the CPI report. And if that comes down again, so 2 reads in a row, like I've been saying for about 6 months, well, the market is forward looking and it is going to fire off. Okay, now that we know that CPI came down a little bit, we know that the FOMC governors and presidents are saying by majority that the Fed should still raise rates, but be less aggressive and maybe lower to a 0.5%. The market's going to rally. And what we want to do is we want to know what the leaders are. We want to see what has bottomed, what's coming out of phase 4, what's going into phase 1, what is going to initiate an accumulation phase and follow that money. And we want to start to identify leaders, first stage bases, and hopefully cup and handles with breakouts that hold. Let's look at a few stocks. Even though we might not be there, there are some industry groups and sectors that are prudent or intelligent to buy into that you know smart money will want to put their money in at these low prices. Okay, here we are. This is Tesla. Now, Tesla is at the beginning or infancy stages of the electric vehicle revolution or evolution. It should not stop till 2050 and beyond. And smart money is going to look at a company like Tesla that's leading the pack, that has its own charging station, that's working on full self-driving, as well as boring tunnels in the ground that will be retrofit and compliant for Tesla vehicles to solve the traffic problem. So these prices are outstanding even though the multiple is high. And remember, yes, it's good to get good value, but a high multiple happens when there's a lot of demand. It's come down as far as it's been in a very long time, and if inflation ticks down a second time, smart money knows that Tesla is a leader, and it's in a space that's going to make money long term. Not only that, but they have memory of making so much money on a company like Tesla. So let's look at the 1 hour. Okay, and here we are on the 1 hour. You can see it's been beaten down. Okay, it's been rough. Came all the way down, made a low, made a higher low. Rejection on the 200. This is on the hourly. And it has found, you know, a floor right here. And this is why I like showing people on the 1 hour, because you can see if it's established a local floor with multiple touches and then starts a pivot. And you can just see that clearly from this going from pink to green, and now the price action's going up and it's right at the 200. And if it crosses over the 200, it's building momentum. Momentum can breed more momentum, which is bigger price action, more volume, and it could be moving into the 4 hour and back to the daily. And remember, smart money is greedy, and they know when to buy. And when do you buy? You buy when the macro headwinds subside, like they're starting to, and you buy when the value is low.
How's one guy able to do so much?
And because he's one of our great geniuses, and we have to protect our genius.
This guy's landing rockets. You know, he's landing rockets on you know, robot drone rafts in the ocean.
I think what Elon's done with Tesla is fantastic.
I think Elon's absolutely fixated on going to Mars, and that is almost, I think, is his life mission. And
you know, you can respect Elon Musk for his genius, but you have to really respect it because he puts every cent that he has on the line.
So you own a Tesla. You own a Tesla.
Absolutely.
Well, I mean, what about the
and he's one of our very smart people.
They said he's sleeping on the floor of the Tesla factory while they're trying to get production ready.
I think that he is, probably the most important entrepreneur on the planet.
You see someone like Elon Musk. I mean, the hell do you make of someone like that? What did he do? He made an electric car, which is basically impossible, and it works, which is basically impossible. And then he built an infrastructure so that you could charge the damn thing wherever you drove, and that was basically impossible. And then he made it cheap, because if you buy an electric car and you factor in the price of gas, the electric car is actually about as expensive as the gasoline car. And so that was unbelievable. And then he built a bloody rocket, which was 1/10 the price or less of a NASA rocket that you could reuse, which was impossible. And then he put one of his cars on top of the rocket and he shot it up into space. And then this happened, right? This all happened, and he's still alive.
So here's CrowdStrike on the daily, and you can see it was up almost at $300, and right now it's at $140. It did have a low of $120.50, but it's making a higher low. And if it goes up and makes a higher high, you're now in a channel and you're moving up. Cybersecurity is here to stay. CrowdStrike is a good company. You want to put your money into companies that are going to go the distance in the right industry group, that are favored, especially with what's going on in the world, such as the war in Russia, Ukraine, or these hackers. So that's something to think about. So here's CrowdStrike on the hourly. You can see it established its low, came up, okay, came back down, and it's got the Jedi green lights, and it's flirting with the 200. This is a good time to get in. CrowdStrike is in it for the long haul, especially with all this cybersecurity. Now this is Nvidia, okay? Nvidia is a great company. It was at $346. It went all the way down to 108. It's currently at 165. It has the green lights. It's trending up. It's found a bottom. It's right below the 200. And when it emerges as a leader and leads the rest of the industry group. Big money's going to want to have the leader, and they're also going to want to be with a company that's going to be around, not go bankrupt, that's being ran right, and has a future in its space. So here we are on Nvidia on the hourly, and speaking of future in the space, ask yourself, will people need chips in the future? Yes. Will people have phones that need chips in the future? Yes. Will people drive cars that use chips? Yes. Will there be schools? Will there be universities? Will there be demand for chips? Yes. Nvidia is going to be just fine, and this is a good time to be getting it if you're investing for the long term. Just like CrowdStrike, just like Tesla, these have a long time horizon and big gains to come in the future if you're looking at a long time horizon. Another good one to consider, because you want to put your money in, your hard-earned money, your choice, your conviction, in companies that will not go bankrupt. You want to put your hard-earned money into companies that are ran right, that have a lot of revenue streams, and that will not go bankrupt. And Disney is down very low. They just let Bob Chapek go. They just brought in Bob Iger. Bob Iger was there for 40 years. He's the one that signed the licensing deal with LucasArts for Star Wars. He brought in Marvel. They have cruise lines, they have real estate, they have theme parks in multiple countries on multiple continents, an animation team that is the best of the best. They have movie stars, they have movies, they own Pixar, they have Disney Plus, they have revenue streams. So again, the market is forward looking. The Dow is leading us, and it's telling us, and so is the Fed and Fed presidents, that maybe inflation is going to come down, maybe these are established lows and bottoms, and maybe we are going to leave phase 4 and go into phase 1, and maybe this is a good investment for us to have and put our money in.